Hi, I'm Chris Hearn, the founder and CEO of Fountainhead Commercial Capital. I've been doing SBA lending for almost 20 years, and some of the most pervasive myths and misperceptions that I hear, I'm going to cover in this video today. In fact, I'm going to cover the top 5 that I hear all the time still today. Number 1, takes too long. Anytime somebody hears SBA, whether they're a commercial real estate broker, a small business focused accountant, or maybe the business owner themselves, invariably they think SBA loans equal long time to get approved and closed. Nothing could be further from the truth. If it takes too long, or you've had that past experience, chances are you were a guinea pig for your lender. That lender doesn't do this for a living on a regular basis like we do. So if you deal with a specialist lender, however, I would argue that SBA loans, particularly 504 loans, can take place, can get approved and closed in almost as little time as a conventional lender. And oftentimes, this day and age, probably much faster than you could get from your ordinary bank or credit union. So that's the first thing. They don't take that long. In fact, our average close is about 45 days. We've actually closed loans in as quick as 25 days. So it doesn't take too long. Let's put that one to bed. The second one I oftentimes hear is it's for the worst borrowers, or the bottom of the barrel type borrowers. Again, nothing could be further from the truth. I suppose a long time ago, SBA loans were considered as loans of last resort. They were the lender of last resort, but that's not really the case anymore. I think in particular after the recession, the SBA really proved itself as a terrific source for America's entrepreneurs. So I don't think this is the case anymore. In fact, a lot of times we are accepting loans from borrowers who would have normally gone conventional, but they didn't want to put 2 to 3 times the down payment down to satisfy their bank and to lower their bank's risk while increasing their own risk. Or they wanted to have a little bit longer terms. And frankly, they wanted to have long-term below market fixed interest rates on half the loan, which is what you get with an SBA 504 loan. So we tend to do very bankable transactions, deals that the banks would have liked to have done conventionally, but for whatever reason it took them too long to get to it, or the borrowers are just too smart and wanted to work with a specialist like us. So that's the second thing. They are not for the worst borrowers. The third thing, oftentimes we'll hear that, hey, an SBA loan, that's the loan that they're going to take a second on your house, and they're going to put a UCC filing on your inventory and your receivables and all these other things. They're going to collateralize everything. Well, the reality is that's people confusing the 7A loan with the SBA 504 loan. With the SBA 504 loan, we only collateralize the property that we're financing. So again, we generally don't need to take seconds on homes. We generally don't need to put UCC filings on other assets of the business. That does happen oftentimes with the SBA 7A loan. That's a different product, and we can cover that some other time, and I'll tell you why maybe it's not as good for commercial real estate financing as an SBA 504 loan. The fourth objection I hear, or myth, is it's tons and tons of paperwork. Well, I will tell you, in the last 20 years, the SBA has done a tremendous amount of streamlining. We don't have nearly the paperwork that we once did in this program. And actually, post-recession, most ordinary conventional banks have just as much paperwork required as our SBA 504 loans. So it's going to be a little bit of paperwork, I won't lie to you, but there's not this huge gulf of difference between what the banks require for conventional financing, what we would require for an SBA 504 loan. That's just simply not true anymore. So it's very similar. You have to be organized, you have to assemble some documents, and we try to make the process as painless as possible for you as the borrower. Last thing that I hear sometimes, and I'm not sure where this one comes from, I sometimes hear SBA loans have higher rates than conventional bank financing. Again, nothing could be further from the truth if you're talking about SBA 504 loans. SBA 504 loans, which you may have watched in another video of mine, breaks down into 2 mortgages or deeds of trust. The first mortgage is a 50% conventional loan, basically a bank pricing. The second mortgage, or deed of trust, is a permanent SBA guaranteed loan that actually is a bond that the SBA sells on a monthly basis that provides below market long-term fixed interest rates. At the time of this recording, it's in the low 4% fixed for 20 years. So it substantially brings down the total cost of capital to the business owner. So it's not higher rates at all. In fact, oftentimes we're actually lower than what banks would provide for an ordinary commercial mortgage. Again, this may be a relic of the past from SBA 7A loans, which are oftentimes priced over prime and oftentimes float. Right now, we're substantially below prime with obviously a fixed rate. So it's a big difference. So those are the top 5 issues I hear about SBA loans, SBA in general, but really SBA 504 loans that simply are not true. I hope this was helpful for you, and hopefully you'll spend some more time on our website and take a look at some of the other stuff that we've got out there. And if we can help you or those you know at any time, please don't hesitate to let us know. Thanks so much.